So good morning, and thank you for joining us for this webinar on Pyxis Tankers. With me this morning is Eddie Valentis, the CEO of Pyxis Tankers. Good morning, Eddie.
Good morning, James.
James, before you start, let me thank you and Eddie for joining. I'm Nicholas Borneus of Capital Link, and I would like to welcome you to today's webinar. Today's webinar is a live one-on-one discussion between the Chairman, CEO, and of Pyxis Tankers, Mr. Eddie Valentis, and Mr. James Jang, the Director of Global Research at Univest Securities. And I would like to thank them both for joining. I will let the discussion continue. Just for disclosure purposes, Capital Link is the investor relations advisor to Pyxis Tankers. And today's webinar is being conducted for informational purposes only. It does not constitute investment advice or advice of any kind. Please note that you can submit questions live during the webinar, and James and Eddie will pick them up and reply. And without any further delay, James, the floor back to you, and Eddie and James, thank you for being with us.
All right, thank you for that, Nick. So Eddie, to begin, can we start with a quick background on Pyxis and the current fleet composition?
Hi, James. Hi, Nicholas. Thank you for inviting me to this webinar. It's a good opportunity for us to expand a little bit on the company and, of course, give you a little bit on the market as much as we can, because as you see, all this COVID situation and the variants is changing day by day, and it's affecting our industry as well. Regarding the company, James, it's Pyxis Tankers is listed at NASDAQ. The ticker is PXS. We have been listed since 2015. It's been 6 years that we've been public, but we have not done a lot of transactions, mainly because the market has been very, let's say, slow. Tanker market has not been very active during the last 6 years, and the capital markets have not been appreciating very much the story. The stock has been trading, has been volatile over the last 6 years. Whenever we found the opportunity, we were able to raise capital, meaningful capital, and we have done significant transactions, especially the last year. Currently, the fleet consists of 6 vessels. 6 product tankers, mainly MRs. This is the segment that we would like to focus in. We're focusing, and we would like to focus more in the future. The MR2, the 50,000 deadweight vessel, we consider it to be the workhorse of the industry. It's the largest segment of the product tanker sector. And it's a more versatile vessel, as it can fit most ports in the world and can carry many products. Our vessels are IMO 3 category, which means we have a variety of cargoes that we can carry.
Great, thank you for that. And so you mentioned the MR2s. For the past, I would say, year and a half, there's been a lot of chatter around LR1s, a lot of larger product tankers. Can you give us a little different on what the differences are between the MR2s and the larger LR1s and LR2s, and why you think that the MR2s are a better bet? Is it because of the operational efficiency, or is it, like you mentioned, they are the largest fleet and they could dock in any port in the world? What are some positives that you can tell investors about the MR2?
Well, exactly. I mean, the MR2 is medium range tanker. It says, the word says it all. It's the medium range, the medium sized vessel. It can fit most of the ports of the world and can go to most oil terminals in the world. Currently the fleet consists of approximately 1,600 vessels. And it's the majority of the sector, of the product tanker sector. The LR1 is the immediately next bigger size of product tankers, and of course the LR2 is currently the biggest product tanker vessel in the market. We're not ruling out any of the other sectors, but for the meantime, we want to focus on in the MR. We know this market, and the market knows us about MR operators. Although a small company, I must tell you that we have significant clients and devoted clients.
Great, thank you for that. So I think it would be best to categorize Pyxis as a product tanker company for now, because you don't know if you'll go bigger or smaller later on, right? But the refined products, the product tanker trade, this is where investors should turn to when they're looking for this segment of shipping.
That's correct. We are mainly in the product sector. We do refined products. We do not do crude. So it's as you said, as you explained it very well, it's a refined product carrier.
Excellent, thank you. And so, recently you guys have been active. You announced 2 acquisitions, one closed, one should be closing. You purchased the 2013 built Carteria and the 2017 built Lambda. So with these 2 modern tonnages coming into the fleet now, are you looking for more opportunities now or as we move into 2022, or are you kind of happy with the fleet composition at this point in time?
Well, definitely we want to grow. We have been, we are a growth company. We have stated that in the past, and nothing has changed. We've been given the opportunity, and we thank very much the shareholders and the investors for giving us the opportunity this year to raise meaningful capital and be able to acquire, as you said, 2 vessels. In the meantime, we also restructured our debt. So we have a very low cost of financing cost at this moment. So we've done moves, although the market has been dreadful this year. We have done some moves in order to bring the company into its new position and take advantage of the fundamentals as we see them developing, especially we were hoping end of this year, but with the COVID variations, etc., we don't know, but we definitely think that the beginning of new year, we would like to be positioned with a fleet of modern MRs, and this is just what we did. We acquired 2 vessels. I must say the 1 vessel counter-cyclically, the Carteria, as you said, which was added to the fleet back in July. And we believe that we did a very good acquisition now by acquiring the Lambda, a 4-year-old MR, very modern and very eco-friendly MR.
Okay, excellent. And just a quick overview on the 2 purchases. I know you financed them with bank debt and cash on hand. Are lenders open to shipping again?
Well, yes, they are. Okay, they're not as active as they used to be, but I must say that especially Greek banks have opened for shipping again, and we are very happy with the transactions that we've been able to do this year with a specific lender, Alpha Bank. I must say that we see activity also in other European banks. So as far as strictly ship financing banks are concerned, I see a lot of activity, more activity than in the past years.
Excellent. All right, so going back to these 2 vessel purchases, how do they compare with what's being marketed on the S&P market now? I mean, in terms of, I guess, not just value but specification, and why you chose the Carteria and the Lambda versus what might be available to other ship owners.
Well, as you've noticed, we've chosen to acquire eco vessels. 2013 built Carteria is 1st generation eco vessel, and the Lambda, which we will be soon be getting to the fleet, is a 3rd generation eco vessel. So it has the features that charterers will be looking at in the future. As you know, a lot of environmental regulations are coming, especially next year regarding emissions. And therefore, we believe that the fleet should comply with these regulations that are coming. And these vessels are, we believe, will be very competitive in the new chartering environment, which will prevail especially in the end of next year. They are considered more modern vessels, eco vessels, and environmentally friendly vessels.
Excellent. And do you believe that could be a reason why there has been elevated scrapping for the MR2 vessels this year? Is it because of the environmental regulations and shipowners don't want to invest the capex, or is there some other factors as well?
Well, definitely the market has been very disappointing, especially for older tonnage, which might have to undergo special surveys, whatever, fourth special surveys, 20 years of age, etc. Especially is a very sensitive dry docking, and therefore this is a substantial cost. So some owners, and rightly so, they have decided to scrap their vessels instead of taking a costly exercise without a certain outcome, because the market has been very, very volatile this year. So we've seen so far, I think, if our numbers are correct, we've seen 32 MRs going for scrap since the beginning of the year, and this is the highest we've seen in the recent years.
And so with this elevated level of scrapping, and it seems like the order book is fairly muted. We're looking at close to 8% in the order book. How do you view this shaping up for the next 2 to 3 years? Not even really long term, but medium term. If everything stays the same, and with the order book muted and scrapping levels to increase, what should that ultimately do for the whole fleet?
Right. I mean, regarding the order book, I mean, our sources say that the order book is around 6% overall, without taking into consideration scrapping. So we have estimated that the annual increase in the fleet would be in the region of 2% for 2021 and 2022, which is a very comfortable level, considering that we anticipate oil demand, according to IEA, for next year to pick up at around 3.5%. So you see that the demand supply equation is very good, very, very promising for the future. Now, regarding new buildings, I don't really see the reason of placing new buildings today. First of all, the prices have escalated substantially since last year. We've seen the prices escalating up around 15%. So for a modern MR now in South Korea, you have to estimate that you will be paying 41 to 42 million for delivery end 23 or beginning 24. And with the technology, which is in question mark, because the existing technology is changing. The fuel question, what fuel this vessel should be burning in the future, is still undergoing. It's a big discussion. It's still not clear regarding especially the medium range tankers, the smaller vessels. It's not very clear which will be the prevailing fuel for the future. So placing today an order, besides the price, is a bit risky, considering that technology will be rapidly changing in the next couple of years.
Okay. Oh, and leading to that, so in terms of fuel, if you could tell our investors, what fuel your fleet is currently utilizing, and how the eco modifications are helping Pyxis.
Yes, I mean, obviously we're burning low sulfur fuel. This is the regulation as from the 1st of January 2020. And of course, this was back then, it was a big story for us. And if it wasn't for COVID, I think that the tanker market would be completely different, but that's another story. So we're burning the compliant fuel, obviously, the low sulfur fuel. And all our vessels, except one, are eco vessels. And the one which is not eco vessel, we have modified it as eco vessel. So we have upgraded with all the fuel saving devices. So again, we are being proactive, and we are looking into the future, and we are trying to bring down our consumptions and emissions the lowest possible level.
Thank you for that. And so, we touched upon COVID a bit, and it seems the tail of COVID is going to last a bit longer than we expected. But there does seem to be some positive short-term aspects, the polar vortex in the northern hemisphere, and also the Beijing Olympics. How do you feel these two dynamics could help the ton-mile demand for product tankers?
Really, I mean, James, thank you for the question. I mean, we were really hoping, looking at the transportation fuels, which is a major cargo for us, and the pickup in activity, the acceleration of vaccination process during the last, especially in the last 8 months, and the increased mobility of people, especially in the OECD economies. We were really thinking that we were turning the corner soon. We're looking also at the inventories, which are at 5-year averages or below 5-year averages. We were hoping that really this is the change also. Besides container market, bulk carrier market, which you see they're very active, we were hoping that the tanker industry, it's really happening. Now is the time to do it. Unfortunately, we have now the new variant, and this is pausing things for a bit. So although I would like to be very optimistic and tell you a lot of things about the market and why we think that the next months will be great for the product tanker industry, unfortunately, we have to be very cautious because, as you see, the variance is something that we have no control of.
So that's interesting. So let's say things do start to, I guess, get better, right? Regardless of COVID in 2022. So let's say MR2 spot rates average 12,000 per year, which is close to the 5-year average going back from now. What do you think will happen to asset values? And, you know, would this signal to the market that the market is still in the trough, or do you think asset values will still pick up if it's 12,000 per year?
Well, I will tell you what's happening this year, and despite the very volatile market and let's say depressed market, it's not only volatile, it's depressed, let's face it, asset values have risen. For example, since we bought the Carteria 2013 first generation eco vessel back in April for 20 million, since then, prices have appreciated, and this vessel now is worth in the region of 22, 22 and a half. I'm not so sure, but I have to check it again. But the prices have increased, and this is in anticipation of a better market. Everybody was expecting that the product tanker market, especially the eco vessels, will do much better by the end of the year. Now, if you're asking me what a 12,000 rate would do for asset values, I don't think it will move the needle. The important thing is to see that there is a momentum in the market, that this is sustainable, and therefore we'll see asset values increasing substantially, considering also that the order book is at a very, very reasonable level.
Okay. So, you know, that's for 12,000. We were estimating close to 17,000 for a standard MR for next year in 2022. If there is a sustained 17,000 average for 2022, what do you think that is for investors to understand? What kind of signal is that to the market in terms of asset values and in terms of earnings power for product tanker owners such as yourself?
You said, sorry, James, you said 17,000, correct?
17,000.
17.
That's the standard.
Yeah, that's what your projection. Well, I have to say that it's a nice rate, considering also that you know, it depends on each company's total break even, but we believe we have a very comfortable break even, and therefore with the 17,000 we will be realizing significant cash flows, and therefore we consider that this is a good rate. Although we are hoping that the market will be much higher than that, but it's a good rate. I don't know. I cannot tell you what it will do for asset values, but definitely, since you've seen that this year, with a very bad market, asset values have risen. With a good market next year, asset values will rise even more. It goes without saying. So we're comfortable that the 17,000 average next year is a healthy market, healthy cash flows, and it's a good investment to be in the product tanker, generally in the tanker segment.
So if 17,000 is a good market, and asset value should grow along with it, at what point does Pyxis take a step back in terms of fleet growth on the secondhand side? Because theoretically, asset values on a modern tonnage should be fairly high. when do you switch to new builds and other ship owners as well? At what point do rates and asset values kind of push you to get a new build vessel versus going on a secondary market?
Well, for us, public companies, it's all related to share price. As we have proven over the 6 years that we've been public, we have always raised capital at significant premium to NAV. So this is what the model is, and this is what we will follow also for the future. We will not dilute shareholders. This is the model. We will not do it. So whenever we have the opportunity to raise meaningful equity and make an acquisition which makes sense price-wise, we will do it. And we've proven that this year with the 2 acquisitions that we've made. Now, the latest acquisition, we've done it with a mixture of cash, shares. So, if that is the case going forward, we will also consider it for other acquisitions. We are not ruling anything out, but it has to make sense, and it has to make sense financially, must make sense asset-wise, and of course, quality-wise. We will definitely be looking at modern eco vessels. Regarding new buildings, as I've said earlier, this is not something we are looking at unless you tell me that there is a very interesting technology around the corner, and it might be a good opportunity for Pyxis to diversify and show that it's moving to a new sector, which actually is the prevailing sector going forward.
Okay, thank you. And you mentioned, yeah, you guys have done a pretty good job raising capital, like you said, above NAV. There has been a lot of shipping deals done since 2019. Different sectors of shipping, but there were some private tanker owners. So just to kind of let our investors know about Pyxis, you will not do those types of financings that they've seen.
Yes, James. I mean, it's all about our track record, and we've proven that this difficult for tanker market years, 6 last years, we have been very patient, and we've steered the vessel towards the right course, and this is what we will do according to what we believe. We will not change direction. We will keep the course, and I'm sure that we will find the opportunity to grow the company the way that we anticipate and we all envision.
Hey, thank you for that. So, let's switch gears on now to the market. What is, in your mind, right, or your opinion, the greatest risk factor that could disrupt the product tanker market on a ton-mile basis? And also, with new COVID variants coming along, and there's port restrictions and there's logistical displays, this is really for your opinion. What do you think in terms of the logistical displays will be continuing next year? And what are some risk factors that could disrupt any ton-mile demand growth for product tankers next year?
James, I know you have time limit, but I will try to be as short as possible on that. Definitely COVID, as I've repeated many times during this discussion, COVID is the unknown factor, and we cannot rule out that new variants will be coming throughout the beginning of next year. It's very important to see the acceleration of vaccination process in non-OECD countries. As you've seen that the new variant comes from such a country, therefore we need to see the acceleration of vaccinations in order to feel more comfortable that we will see a market which will be turning and turning soon. Now, regarding the fundamentals, I don't need to be repeating them. The transportation fuels are on the rise. Of course, seasonality for us is very important, and heating oils, etc. And considering also what's going on with LNG prices, coal prices, etc. I'm sure that we will see a switch in heating oils as well very soon, and this will be a demand which will be also compared to the winter that we will be facing in the northern hemisphere. This is a significant timing for us, winter time in the northern hemisphere, where we are actually having substantially more demand for transportation of heating fuel. So, and on the other side, if you're looking at long-term fundamentals, definitely, I mean, we see new refinery capacity coming in the Middle East and Asia. We see less refinery capacity in OECD countries. Therefore, we consider that ton-mile demand will increase in the future. And of course, you have all the other factors which will play a role, i.e. Depleting reserves, inventories. Gradually we will see a normalization of trading of refined products. And in addition to a decelerating COVID situation, I think this will be very positive for product tankers going forward.
Thank you for that, Eddie. We have 2 questions, so I think we might have time to answer these. Can you tell us what the dry docking schedule for 2022 is? Don't have that handy. We can
not out of my head, but I don't think we have something for 2022. I have to cross-check it. Sorry about that.
The next one is this is a simple one. What is the share price for the shares to be issued to Mr. Valentis in the lambda transaction? Yeah,
this is a very important question. The only thing I can say for the specific question is that our share price is trading at a significant discount to NAV. So unless we see the stock price appreciating at a substantially bigger number, we're hesitating to do any transaction in the capital market. So we will wait until the share price will appreciate to where it should be.
So another question that came in, if the stock stays below $1, when will a reverse stock split be required?
Yeah, we have a limit, a certain limit, which we could trade under the dollar. And if we exceed that, of course, prior to that, we can ask for an extension from the stock exchange, from NASDAQ, in order to have another 6 months in order to rectify the stock price. So for the time being, we're not considering any reverse split.
And just to be clear, and I'm sure all the investors want to know, you guys have not had, Pyxis has not had to do a reverse stock split.
Correct. We've never had a reverse stock split. Never.
And just going back to, I guess we have a question on lambda transaction. So it was cash, stock, and a term loan, and 3 million worth of shares were issued to you for the party transaction for the lambda. Can you talk about the VWAP and the extra steps that you and the board took for the lambda transaction?
Well, thank you. That's a very specific question, but we will tell you that the VWAP was calculated 5 days before the PR release and 5 days after the PR release. So the average of 10 days, 5 before PR, 5 after PR, in order to be on the fair side in case the stock price started moving after the release or after the press release.
Yeah. And we do not have any other questions. So before we leave, we'll just talk about one thing. There's a lot of news around tankers, and we made it clear that Pyxis is a product tanker company and not a crude tanker company.
Yep.
But we know that they are linked. You can't have refined products without crude. and,
Correct.
and the crude market has been beat up for a bit. 22 also looks there could be a glimmer of hope from where we are now because the crude tanker market is pretty depressed. What type of signals should investors be looking for on the cruise shipping front if they want to get ahead and invest in a product tanker company?
I will. I'm hesitating to reply on this question because I don't want to give the wrong signal. But the only thing I can say is that also we've seen signs of improvement in the crude market as well. So crude tankers have been doing better, at least in the last 2-3 weeks, some sectors. So we've seen signs of improvement also in the product sector. It didn't last a lot long because also of the developments in the COVID front. But we've seen signs of improvement, and therefore the only thing I can say to investors that are looking at this relationship between crude and product is to follow each public company's announcement regarding fixtures, time charter fixtures, and compare them with previous time charter fixtures before in the year. In that way, they will get the feeling of what the market's doing, unless they have direct information from brokers or other sources, which they can have the information. But I'm sure that the public companies are very transparent and they can inform all the shareholders on what's happening and the improvements or deteriorations in the market. If an investor takes the view that the crude market will be the first one to run, then they should follow really the crude tanker companies and then decide whether to invest in product tankers as well. But I'm not so sure that this will happen this time. It remains to be seen.
Okay, gotcha. And one final question in terms of, I guess, the chartering strategy. Pyxis has employed a mixed chartering strategy from the beginning. And as we move into 22 and 23, and let's say the markets do recover, do you still feel that you would employ a mixed chartering strategy, or would you go all spot?
Yes, it's a good question, James, and very fair. Always we had a mixed chartering strategy. Visible cash flows for us was very important. Of course, we're a bit hesitant to fix vessels at these market conditions because time charters now are really low. Therefore, we have more vessels in the spot market, really anticipating the improvement of the market, considering also seasonality, which is kicking in as we discussed earlier. So definitely the model is 50-50 going forward, but now, unfortunately, we're not at 50-50, we're less than 50 time charter because we are not comfortable in fixing vessels at longer periods in this environment.
Excellent. Okay, thank you for that color, Eddie. I think those are all the questions we have. I'll turn this over to you, Nick.
Thank you, James.
Thank you. Okay. So without any other further questions, I'd like to thank Eddie for joining us.
James, thank you. It's been a pleasure.
Thank all our attendees and participants. I hope that this webinar was informative and all your questions were answered.
Yeah, and I'm really hoping that our shareholders and our investors are really hanging in there. It has been a very difficult year. I realize that. But there's nothing we can do. Our industry is very much related to what is happening in the COVID front. And unless that situation is cleared, I cannot give any comfort to shareholders as to the reaction of the market and to our share price.
So Nick, I'll turn it over to you for closing remarks.
I just wanted to thank you very much. This is always extremely informative to have people like yourselves who are deep in the industry, share their insight. So thank you, James, for moderating this discussion. Thank you, of course, Eddie, for your insight. And we look forward I hope I can say to better days.
Well, we're forecasting better days. So
The better days will come. The thing is when, and you know, definitely they will come. The problem is the timing.
The problem
Always.
is the time, exactly. Anyway, so thank you very much to both of you. And by the way, this discussion will also be available on demand on YouTube, on the Capital Link website. And again, thank you, James, and thank you, Eddie.
Thank you, Nicholas. Thank you for hosting us. James, thank you very much.
thank you, Eddie. Thank you, Nicholas.
Thank you.